What up, Hyperchange? Welcome to another episode. Give me a thumbs up if you can hear me. We are live. Happy Tesla earnings day to everyone tuning in. So Tesla, I put a link in the description to Tesla's investor relations website where the shareholder letter will be released. We know the conference call is going to be at 6:30 tonight Eastern in about 2.5 hours. The earnings letter gets released sometimes before then, usually around 4:30 in like 30 minutes. So we're gonna have some time to kill. I'm gonna be refreshing this page every so often. If you see me, if it comes out, I'm sure you guys will let me know in the chat. So yeah. First thoughts, first thing on everyone's mind here is Elon Musk is making some controversial tweets about illness 19. And yes, that is what it is. I guess it's nothing new to the Tesla community, Elon making controversial tweets. I'm hoping that, the conference call doesn't get too political and like turn into something where they start talking about, illness 19 in the macro situation instead of Tesla. I'm kind of worried that could happen. But anyway, so I'm expecting, I put an estimate for my financial estimates below, which you can click a link to. It's on Hypercharts. And my estimates, I'm probably going to be wrong. I'm conservative about 5.7 billion in revenue, a loss of 270 million. So I'm conservative. I think Tesla will beat those. But even with those numbers, like this was going to be a very, very impressive quarter for Tesla, where year over year, comparing to Q1 last year, they're going to reduce their loss, grow significantly. Even despite this shutdown that occurred in the last week of the quarter, I think we forget that this quarter is like a one-off. The last week of the quarter was shut down, the whole world was collapsing. Even despite that, Tesla's going to put up a really strong comparison and growth. And we already know a lot of this. I think a lot of the hype of Tesla earnings is a little overdone because we know how many cars they delivered, which is really the most important number of the quarter. They delivered 88,000, up about 40% year over year. My take is revenue will grow, but slightly slower than that because maybe service revenue is lower because less people were supercharging. Maybe average selling prices came down a little bit. Maybe energy revenue didn't grow as quickly as 40% because of all this. That's one thing that I'll be looking for as well, is energy revenue has been guided to grow at 50% in both storage deployments and battery deployments. And so I'm curious if Tesla will continue on that guidance. And then, what's the growth in Q1? Solar has a super weak comp. I think, the battery business has a weak comp. So those are probably going to show growth unless they really got impacted by the illness 19. Additionally, on guidance, I think the big question on everybody's mind that I put in my preview video is, will Tesla confirm that they are still on track to deliver 500,000 cars this year? That's what everybody is wondering. And I believe the way it's going to go down is they're not really going to mention it. And then they're basically going to say, like, we're not going to say anything about it, basically leaving it. We're not taking down guidance. And then if Elon Musk gets pressed about it, he's basically going to say, look, like, I still think we can do far better, or I still think we can hit 500,000 cars. So we're not going to drop guidance. It'll just be more difficult to do so. Additionally, I think a lot of people are reading into the stay-at-home order in the Alameda County where Fremont factory is a little bit too much. My personal understanding is that Tesla could potentially be an essential business and just doesn't have any of those constraints and is just choosing to stay down. And I think a lot of this makes a lot of sense. Like Tesla had an inventory overhang of 15,000 cars in Q1 as they build up a little backlog. I think it makes no sense to get the factory up and running at full speed if you can't deliver and sell all of these cars that you're going to build. And so I think Tesla is sort of leading into this shutdown a little bit. And my theory is that if they are able to reopen, if Tesla can reopen Fremont and start ramping it by mid-May to late May, we're getting close to back to normal, then I think that there's a very good chance that we hit 500,000 deliveries this year. Of course, with China being a big X factor, how fast that ramps. But I think if it gets pushed to June, if it takes longer to reopen, it's going to be really hard to deliver 500,000 cars. But remember, Tesla only delivered 367,000 cars last year. Like, for them to grow at all, I think it's going to be very easy for them to actually just straight up grow, which is going to be really impressive. They're probably going to be the only automotive company to grow in 2020 will be Tesla. Anyway, what's up to everybody in the chat? 3,000 of you. I'm going to do a quick refresh to see if we got that letter. Nothing yet. Financial education in the house. What up, Jeremy? Was actually thinking I should get you on the channel for an interview at some point. But yeah, so I'm most excited about this quarter because I think Elon and the team is going to have a lot of interesting updates. One thing that I've been personally wondering about is semi-production. They said that was going to start this year, and I don't know. I think that's probably they kicked the can down the road on that. Battery Day was supposed to be in April. Clean Technica, what up? Clean Technica also posts on YouTube a live stream of the conference call. You can go to Tesla's earnings investor relations website to watch it, or you can go to the Clean Technica live stream, which is on YouTube. I put a link below if you guys want to check that out. They're going to throw up some hyper charts in there too. So that's going to be epic. And I know Mo will be tweeting and Hypercharts will be tweeting out all of these financials when they're released. And so I put a link below. So if you want to visually see how this quarter stacks up to all the others, right when it comes out, you can go into Hypercharts. Solving the money problem, saw you there too. What up? Is there anything you would like to know? Thank you for the super chat. Tesla dropping. All right, if it moves big after hours, that means something may have come out. I'm refreshing the site and I'm not seeing anything yet. Nope. One thing I went on a little bit of a rant today was that I thought, I'm really surprised that Tesla stock has stayed up so strongly. Thanks to the super chat. I think, after hours, the stock, Viv, what up? Third row. I think the stock can move around rapidly. Like, a tiny amount of volume can make it look like it's up or down 5% when it was really just a tiny trade. I really personally don't look into after hours trading that much unless it's like, been going on for a long time with a lot of volume and consistent. And like after earnings is one of those times when you get enough volume in the after hours trading to really make it noticeable. So, we'll get a sense in the after hours of whether the market loves it or hate it. I mean, my guess is this is going to be very similar to Netflix earnings. We know Tesla's going to have a very strong quarter because of those delivery numbers. And I think the stock has priced a lot of that in. I mean, Tesla stock is like double or more what it was a year ago, despite all of this situation happening. I think the stock has showed unbelievable strength, far beyond my expectations in the midst of this economic crisis. And that's because the market is, pricing in some of the strength of these results and Tesla's relative massive outperformance to the entire automotive market. Another big thing that I think I'm pumped about is self-driving software, the new Autopilot update to read stoplights and stop signs. This is going to be interesting because if this is enough functionality for them to justify maybe raising the price, they've delivered on more of that software promise. They're going to be able to recognize some of that deferred revenue on the balance sheet. Another awesome number we're going to get when this comes out is the deferred revenue total, which we're going to see how much of that software potential Tesla has. And so if Tesla rolls out a big update in April to fleet-wide, that could mean, maybe 10, 20, 30, $40 million of incremental revenue recognition from that deferred revenue in Q2, which will be a nice little bump because Q2 is going to get really bad. But I think, I think the development of the Autopilot software has been unbelievable. And, everyone's sales are crashing. Tesla still basically sells as many cars as they can build. And they're like going to raise the price of FSD because they're rolling out more features. I mean, in a time like this, to be able to do that is extremely impressive. And I want to get, I spilled the beans on this because it hasn't been finalized, but like Omar from the third row, he's actually a software engineer and has an incredible understanding of just like how big this idea is that we can code software to drive better than humans, and just the massive software project that Tesla's pulling off to be able to have, pull in all this data, push out over-the-air updates, train these neural nets, have this hardware suite on the vehicles, and have this entire vertical autonomy stack work together to learn and iterate and improve. I mean, this is an unbelievable cycle, and don't just take my word for it that this is improving. I mean, we see the cadence of updates. We see how the Autopilot gets better. I mean, if you've owned a Tesla over time, you've literally watched your car learn and get better at driving. That's unbelievable. Model X refresh, you just got me on a rant. I'm gonna make sure the earnings letter's not out because it's gonna take me a while. But I actually have a theory that on Battery Investor Day, they will announce they're stopping the Model X production. You heard it here first. Somebody emailed me this idea. I loved it. I forgot who it was. But basically saying like, Model Y is gonna decimate Model X sales even more. And then Model Y has always been the Fabergé egg, like too complicated. I think they made a mistake doing those Falcon Wing stores, just not practical. And if you look at the market share numbers of the Model X versus the Model S, it has done not quite as good in its category because I think a little bit about that. And so I believe that Tesla will stop sales of the Model X when they announce Battery Day and they announce the Plaid Model S. Like, will they come out with the Plaid Model X too? I think no, they'll just leave it, and then they'll only have one super high-end, like multi-100,000 car, and that'll maybe be this like crazy Model S Plaid mode, and maybe then they'll have the Cybertruck Plaid mode, and that'll be another like 100,000 car. But I really think they're refresh. I hope, man, you guys are. Did the letter come out? My computer's crashing. Tesla sites down. Q1 update's out. All right, my rant's over, guys. We're on to the Q1 update. Hit the link below. Tesla's IR website. It is live. Man, they're coming out early. Pre-420. Epic. I'm loading this right now. Looks like a big file. Oh man, I'm pumped. Let's do this. I'm gonna take a sip of my coffee. Everybody pull up the earning update in the link so you can follow along. Q1 2020 shareholder letter. Cash ending at 8.1 billion. They did that 2 billion raise. Cash flow less capex, free cash flow negative 895 million. Of which 981 million outflow was due to inventory growth. So if they didn't have that massive inventory overhang, building inventory for future quarters, cash flow would have been neutral. 238 million GAAP operating income. I was conservative. I was way wrong. Tesla posts a profit. GAAP net income is profitable too. Model Y gross margin positive in Q1. Okay, I'm like trying to process this. This is unbelievable. Reach production of 1,000 solar roofs in a week. Tesla, okay. 2-second analysis, Tesla's done it again, crushed expectations. Not only are they able to grow at an extremely rapid pace, but the profitability and the cash flow of this company is improving. And we are seeing them with increasing scale become increasingly profitable. And Tesla in their seasonally weakest quarter, despite shutting down their factory for a month, despite having to close the entire global economy for the end of March, Tesla still was able to produce a profit in its seasonally weakest quarter. I mean, this is a mega validation of the business model this quarter. I personally am pumped that I was wrong. I was a little too negative. I love that. And Tesla just, they've continued to sandbag. They've continued to not promise profitability. They've continued to really just put their head down and execute and do the work. And the numbers are showing up. And that's why Wall Street is finally getting pumped and getting about the story. It's all about managing expectations. That's the game of Wall Street. And Tesla has figured out that game. They have nailed it down perfectly. And that's why the stock has totally changed. They went, and so many people in the community were, this was so important. We were like, Elon, you can't say you're going to build 10,000 Model 3s a week and totally flop. Then the media grills you on it. You can't say you're going to be profitable and then totally flop. Like, they were shooting themselves in the foot with these targets they couldn't hit. And now all of a sudden, the investor relations team, the press team, Elon Musk has reworked their strategy, pace of learning, innovated, figured out how to play the market's game, and they are just putting up the numbers and executing and not talking about it. And that's what the market loves. And this is another quarter of that. I thought they were going to come in a little better than my numbers, significantly better than my numbers. And if you're seeing the stock, I don't really care what the stock's doing right now. I mean, like I said at the beginning of this live stream, we had such a big run up into this. They were expecting a very strong thing. Okay, somebody's talking about the automotive gross margin. Maybe we got too pumped because we're looking at okay, yep. So 200 million of this swing, automotive credits coming at 354 million. This is a kick in of the fiat credits most likely. This is probably because, I don't know, we're going to get a lot more info on this, but, up from Q1 2019 when they had 216 million in credits, 354 million recognized in Q1. So out of that, $500 million profit swing that I was underestimating, about 200 million of that was just because they got a big incremental bump in credits. But that's going to last for a long time. I think the shorts are going to hate on that. They're going to say, oh, Tesla wouldn't have been profitable without the credits, which I guess is kind of true, but like, you're really pulling, yeah. I think these credits are going to be a line item for years to come and continue growing. Revenue is $6 billion, above my estimates. Total GAAP gross margin of 20.6% is extremely strong, way better than my estimates. And a big difference there is not actually Tesla getting more profitable than cars, though. Once again, it's those regulatory credits. So, it's real money that they're getting for those credits, and it's awesome they have those. But I think it's also important to, when you're seeing analysis, to make sure that it's not, the credits aren't the only thing like keeping this business model together. That's not what's happening. The net cash used in operating activities, 440 million, an improvement from 640 million burn last quarter. CapEx, 455 million, up from 280 million. They're building out a lot more production lines, but still that's lower than I was expecting. Free cash flow of negative 900 million. They end the quarter with 8.1 billion in cash. I mean, this is a game changer. Still Tesla with a rock solid balance sheet. We're seeing GM and Ford halt buybacks, halt dividends, take out massive credit lines for tens of billions of debt to stay afloat. And yet Tesla, they did do that $2 billion raise a couple months ago, but that was just an extra cushion. Even with that, even if they hadn't done that, they still would have about 6 billion in cash. And that would still be plenty right now. And because the second Fremont starts back up, like they're burning money when Fremont shut down, that's no question a problem. But the second Fremont starts opening again, and you start pumping out more cars, Tesla's free cash flow as a company is going to go positive, and you have China increasing as well. So I'm going to just read this here. I'm going to read the summary right now. Q1 2020 was the first time in our history that we achieved a positive GAAP net income in the seasonally weak first quarter. Despite global operational challenges, we were able to achieve our best first quarter for production and deliveries. Although impacted by inefficiencies related to the temporary suspension of production deliveries in many locations, our gross margin remains strong. At Gigafactory Shanghai, further volume growth resulted in a material improvement of margins of locally made Model 3 vehicles. Still probably kind of low, but those were negative in Q4, improving rapidly. In addition, Model Y contributed profits, which is the first time in our history that a new product has been profitable in its first quarter. That pace of innovation on the manufacturing line, Tesla's getting better at building cars. That ramp of super low gross margins to normalized is getting faster. They're getting better at it. And that's why the Model Y was already producing a positive gross margin in this quarter. Despite expiration of various government incentives at the end of last year, Q1 was pacing to be the strongest quarter of deliveries until our operations were interrupted in March. As a result, we remain confident in growing our global production capacity as quickly as possible. We are continuing to invest in our product roadmap, including improvements in technology, localized production at Shanghai and Berlin. At the same time, we are diligently managing working capital, reducing non-critical spend, and driving productivity improvements. We believe we are well positioned to manage near-term uncertainty while achieving our long-term plans. Not much in there. I think reaching 1,000 solar roofs per week is a really good milestone. Let's get into that energy data. Man, I'm getting so excited here. Okay, energy data. We're looking at megawatts deployed of solar down big, down 35%. Year over, or down 35% sequentially, down 26% year over year. Storage deployment down to 260, up 14% year over year, but down 51% sequentially. So a very weak quarter for energy, just because it sounds like, I don't know, we're gonna have to dive into that on the conference call. I got solving the money, but Q1 secured. Yo, Steven, thanks for that super chat. Bjorn, thanks for the super chat. So interesting that energy was so weak, but vehicles were so strong, especially given they were launching the solar roof. And I don't know. I think I think March is a really strong point for the energy industry because February and January it's so cold that they're not doing these installations, or maybe it's seasonally weaker in those quarters, I think. And so that could be part of it, that there was all the revenue was stacked to March, and then as the economy fell apart, they couldn't close a bunch of deals. And that's what's making it look bad. But I'm a little bit bummed about all of this, to be honest. It's the energy business is a weak point. They talk about delivery, global inventory days of supply, 20 days of supply, less than the 30 days of supply they had at Q1 last year, so a smaller relative inventory build. So I think that's interesting. Very slow expansion of store service and mobile service fleet, only up 1% and 2% sequentially, because I'm assuming they're kind of stopping spending. Fremont, okay, they're going to talk here about vehicle capacity in Fremont. Tesla's newest update is 90,000 capacity for Model S and X, 400,000 for Model 3 and Y. This is all Fremont, so just under 500,000 at Fremont as of now. Thank you, Nick. Appreciate the super chat. Model 3 capacity up to 200,000 in Shanghai, already above that 150,000 pace. Model Y construction in Fremont under construction. Model 3 in development in Berlin. Model Y under construction in Berlin as well. And so that's an interesting tidbit because they said they're going to start with Model Y in Berlin. Now we're also seeing that Model 3 line for Berlin is in development. Mark Macro, thank you. Semi, Roadster, Cybertruck in development. No updates on that yet. And oh my God, this Model Y chart, you guys are going to love this. So they show Model 3 selling in the US, selling about 160,000 units or 150,000 units in a year. All other sedan competitors were like 130,000. So Model 3, 140, all other competitors, 130. Jeremy, thank you, man. I appreciate that. You're a big inspiration for my channel, so that means a lot. And the Model Y, if the Model Y, they're saying the market for the Model Y is about double that, almost 300,000 units in the US alone. So if the Model Y does to the Model 3, double the potential in the US, 300,000 units alone. So Tesla basically saying right here, like, we just heard production of the Model Y. This is going to be our best selling car ever. Do not sleep on it. All of the reviews have come back amazingly. Sandy Munro, blown away. I actually may have even secured the bag on a Sandy Munro exclusive interview for the channel. So dropping that on live stream for y'all. If you have questions for that, let me know. Anyway, so Model Y, big time. The second, every other company in the world, Rivian, Ford just canceled their thing with Rivian. Rivian delayed their car. The Bolt just got delayed. Every single automaker delaying EV plans. Tesla moving forward. You know, times of recession, companies. Okay, I saw a super chat about the gross margin. Do not get too pumped about the gross margin, because a big improvement in the gross margin is due to credits. That's great. That's money that Tesla had. But my interest is tracking how much better is Tesla getting at building cars. That's the value. That's the intrinsic value of this company. Can they build a better car for cheaper than they did yesterday? Is that rate of improvement improving? Is it getting cheaper for them to build? Pace of innovation at the manufacturing level. If it's just because of credits that the gross margin is going up, that's great. But I want to understand how the technology and Tesla's prowess at engineering is really doing. So in early Q1, we began production of Fremont at Model Y. Simpler, easier to scale. They basically did all of the first quarter production of Model Y that took 2 quarters of Model 3. They did it in 1 quarter for Model Y. Achieve positive gross margin. Okay, Gigafactory Shanghai. This is the part we want. Our Gigafactory Shanghai ramp is progressing according to plan. Due to better than expected progress, we believe Model 3 will achieve a production rate of 4,000 per week or 2,000 per year by mid-2020. Woo! Okay, I've been making a bunch of videos about how we hit phase 1 capacity. Like, they're like, okay, we're gonna build this factory, pile of mud. Okay, bam, factory built in a year. And they're like, by the end of this year, we're gonna be pumping out 150,000 cars for this factory they just built. But it's only been like 5 months and they're already at a rate of 200,000. Or that's what they're going to hit by mid-2020. So that's way ahead of plan, bigger than capacity, confirming some hyperchange research. And think about it. Every day that Fremont shut down, but Giga Shanghai is growing, the positive cash flows, the margins, they just dropped the performance. They just dropped a long-range all-wheel drive version. As they expand into China, this asset of Giga Shanghai is going to start producing more and more positive cash flow that will start to funnel and offset the losses at Fremont. And this is a major different financial scenario than every single other company in the automotive market. Everybody's shut down, everybody's losing, everybody's bleeding, it's getting worse, worse, worse. Tesla might be able to just shut down their Fremont factory for the whole rest of the year because by the time we get 6 months down the road, China will be pumping out enough cash flow to just fund all of Tesla's expenses. Like, you know what I mean? Like, Fremont is just one big factory to pump out 500,000 cars. Giga Shanghai is going to get there and probably bigger in the next year or two. So very exciting stuff. In April, they launched the long range and performance. So they don't talk about concrete deliveries, at least that I'm seeing yet. Recently finished land preparation, about to break ground on Giga Berlin, on track to start first Model Y deliveries from Giga Berlin in 2021. They still haven't done that. Semi-delayed. Did that get delayed? Autopilot and FSD. Early access program at end of Q1. They got the stoplight and traffic light recognition. Once real-world data is collected, the system will become more capable and our vehicles will continue driving through intersections without a confirmation. So it sounds like, once again, it's a process. Rolling it out to early access program, requiring confirmation, but then eventually it sounds like, it's out in the wild, and once they get it out in the wild, this is just going to continue increasing, and we're going to get, as Tesla's fleet gets bigger, the pace of innovation, like that whole autopilot rewrite, I think the autopilot software story has been moving ahead, has not skipped a beat, despite the Illness 19 thing, so that's really, really exciting. They have a chart of every year in April, the longest range Tesla and the longest range non-Tesla EV. And by the way, if you're following, click in the link below, Tesla's IR website, Q1 2020 shareholder letter. I'm on page 8, and we can all, tune in. Anyway, this chart was a 97-mile gap in April 2017, and now, thank you, David, appreciate that. And now it's a 132-mile gap in April 2020. So the gap of Tesla's longest range EV, 391 miles Model S, of the highest non-Tesla range EV is like 132 miles versus 97. So the gap actually widened by like 40% of Tesla's range lead in the past 3 years. Competition is getting further behind. That is what Tesla's trying to say there. And I mean, anyway. Vehicle software, dash cam viewer, view footage reported by autopilot cameras. I mean, Tesla owners love that. Good, cool feature, I guess. Battery and powertrain. The maximum range of Model S and Model X has been extended further, even without increasing the size of the battery pack. Consumers considering long range as one of the most important factors when switching from a combustion engine vehicle to EV, and our lead has continued to increase. 391 for the S, 351 for the X. We recently introduced a new heat pump system, including the octo valve for Model Y, which allowed us to reach a similar EPA range to Model 3 while being 10% heavier. So the Model 3, the octo valve could be a significant 10% range boost to the Model S and X, to the Model 3 if that's implemented. I mean, this is a really exciting clue, that 400-mile EV, that 400-mile range Model 3, maybe not quite 400 for the Model 3, but 400 for the Model S. I mean, dude, this is epic. That Tesla has said basically that octo-valve heat pump thing, which is basically because it doesn't use as much energy to heat the battery in the cabin in the cold with this new heat pump and the octo-valve thingy. I just love that little Easter egg and how like they turn like this cool, quirky like heat pump technology innovation into like a superhero octopus, which I'm gonna get on a third row t-shirt thanks to Soph. But yeah, and now that's actually that quirky little innovation. Not only it's going to make it so you have better long range and you have better range in your EV in the cold weather. So that's awesome. People are telling me Tesla stock is up right now. Okay, that's epic. I guess people loving it. Energy business. This is very interesting. Megapack. They launched that. It's gaining traction, inflection point and interest for utility level storage, primarily driven by business and reducing costs or progress in reducing costs. Tesla reduces costs, more and more projects become economical. Sorry, I don't want to miss any super chats. Thank you. At the moment, the demand for this product remains above our capacity. Our order book continues to expand due to multiple products in the pipeline that are far bigger than our Hornsdale battery in Australia, which was the world's biggest battery, which was about a $70 million contract for Tesla. They're saying they have multiple deals in the battery pipeline, utility scale interest way above what they can supply. So that's an interesting clue. And we've seen some other news about like a big thing in Hawaii. And so it's like, as you know, electric cars reaching parity with the internal combustion engine, huge moment for renewables, huge disruption for the Model 3, huge market share gains. You know, the second renewable energy technology for the batteries and the solar panels is going to do the same as the grid, and we're getting closer and closer to that inflection because like Tesla said, they're bringing the cost down. The more you bring the cost down, the more economical it gets. And the more projects that open up to you, and we're seeing that flywheel already start to work. And you know, ARC Research, Sam Corris has said that there could potentially be like, I believe it's a $10 billion opportunity in the US alone for Tesla's battery just to reduce peaker plants. And those are already starting to be economical. So although the installs on the battery side were weak, I'm going to hope we get more on that on the call. The backlog looks strong, although this has been, I would grill Elon on that. If they let me on the conference call, this is one thing I'd grill Elon on. It's like, okay, you keep saying batteries are going to grow faster. You keep saying it's going to grow faster than cars. And there's always an excuse of like, oh, we had to divert research to the Model 3, but there's huge projects in the pipeline. We're about to go crazy. And then like, you know, they're saying the same thing now, but it was another weak quarter of the growth. So I don't know, something doesn't add up to me. Anyway, we also have seen cross-selling within the energy business. More than 40% of residential solar customers opt for at least one Powerwall. In Q1, we installed 100,000th Powerwall. Congrats to Tesla. This is the biggest reason why Tesla will win renewable energy. The biggest thing solar companies and battery companies spend money on is customer acquisition costs, marketing. How do you even know about our product? How do you even know you want our product? How do we educate you about our brand? Tesla has all of that in the bag because they have the store. You buy the cars. You already love the brand. They're already educating you with those products. Tesla's incremental marketing costs, that's why they fired all of these people marketing it, Solar City, when they acquired that company. You know, this is why I know that car company, yeah. I know there's stuff I'm not supposed to say, but I know that car companies, what up, third row? I know that car companies are, a lot of them are looking into like, if we're going to do EVs, it's a no-brainer to sell solar panels because we don't have the marketing costs. It's an immediately positive ROI. And so I think Tesla has that huge tailwind for years to come. And I think everybody, yeah, and I'm just throwing out so many like crazy previews. I'm working on like with this animator to make this crazy moonshot with some visuals for you guys about the Tesla smart home, that whole Tesla AC system. Like, yeah, I got a good scheme on that. Anyway, solar roof. In Q1, Gigafactory New York has a significant milestone in a single week. Solar roof production exceeded 4 megawatts, enough for 1,000 homes. I think Elon tweeted that. We will continue to onboard new solar installers to synchronize our ability to produce and install. Feedback from solar roof owners has been positive. Couple dope pics of the solar roof. Outlook, introduction. Okay, big outlook section here. What they're expecting, potentially the most important part of the call or letter. It's difficult to predict how quickly vehicle manufacturing and its global supply chain will return to prior levels. Due to the wide range of potential outcomes, near-term guidance of net income and free cash flow would likely be inaccurate. We will again revisit our 2020 guidance in our Q2 update. While we have the capacity installed to exceed 500,000 deliveries this year, despite announced production interruptions, for our U.S. factories, it remains uncertain how quickly we and our suppliers will be able to ramp production after resuming operations. We are coordinating closely with each supplier and associated government. So they basically did what I said they're going to do. And I bet Elon is going to say what I said he's going to say on the conference call, which is that they think they could still do 500,000. There's a chance, but there's too much uncertainty, so they're not really dropping guidance, but they're not increasing it. Cash flow, while near-term cash flow guidance is currently on hold, we're continuing to invest significantly in our product roadmap and long-term capacity expansion plans as we have sufficient liquidity. Model Y production lines in Shanghai and Berlin remain our most important near-term projects. What about batteries? What about that massive battery factory that you're going to build, Elon? When is that coming? When are we getting Battery Investor Day? I'm waiting for that. There's nothing on Battery Investor Day in here. Like, what's going on? Like, that's another thing I'd be grilling Elon about. It's like, bro, come on. I think they want to do that in person. I think COVID has delayed that. That's my guess on Battery Investor Day, because I know people are wondering. I'm pumped for it too. Profit, while near-term profit guidance is currently on hold, we believe we will achieve industry-leading operating margins of profitability with capacity expansion and localization plans underway. Okay, so basically putting all guidance on hold. Product guidance, we expect that production of both Model Y and Model 3 in Shanghai, Model Y in Fremont and Model 3 in Shanghai will continue to ramp gradually through Q2. Interesting that they already say that they can ramp in Fremont. We are continuing to build capacity for Model Y at Giga Berlin and Gigafactory Shanghai remain on track to start deliveries from both locations. Lastly, we are shifting our first Tesla Semi deliveries to 2021. So Model Y still on track, Shanghai 2021. This is kind of a bummer that they have delayed the Tesla Semi launch. I think we all knew that was going to happen, frankly, just because there's been too much on the plate. And the Semi, it's useless for Tesla to launch the Semi, which needs, Mo, what up, Mo? I don't know about S&P inclusion. I feel like we're very, very close. I'm not an expert on that, but I think we're really close. Yeah, but I think S&P inclusion will get priced in a Tesla stock gradually over time, and it won't happen all at once, and people already see it coming, and it's already being priced in, and it's an inevitability that they will be included in the S&P 500, and therefore I don't think, having a thesis about whether they get included now or later is really material or matters, and isn't interesting to me. But, okay, we got some pictures. Giga Shanghai, oh my god. So Giga Shanghai, future Model Y factory, they're already building it. I mean, it looks like the building that they have now that we see in pictures is like 1/8 of the amount, or 1/4, maybe a fifth of the amount of land they have. I mean, the amount of land they have that they're scheming on right now is like it's just a huge expansion. And so I think this Shanghai factory is very, very misunderstood. Oh, the semi truck. Okay, I got sidetracked. The semi truck. Tesla can't build batteries. So they don't have enough batteries to build cars. Increasing product complexity when you don't have the battery supply to build more products means you just have to build less Model 3 and Y if you sell the Semi. So Tesla is trying to work out its battery supply chain capacity and figure out the highest ROI and biggest carbon impact from those every single battery cell. And if the highest carbon impact is 6 Model Ys that go for autonomous ride sharing versus 1 autonomous Semi, they're going to choose those Model Ys. And so that's been the balance. And so until we get Battery Investor Day, until we understand which technology Tesla's doing, what they're doing with Maxwell, whether they're bringing battery cell production in-house, who they're going to partner with on another mega battery facility if they're not expanding with Panasonic, where do these battery cells come from? That's the question about the Tesla Semi, and Tesla's not ready to tell us about their battery plans, and that's why it's not surprising to me that they're going to keep kicking down the can down the road of the Tesla Semi. But anyway, these pictures, Tesla Shanghai, this is not okay, we're going to build a production line here, and then we're going to pump out 150,000 cars, and da-da-da, and that's the factory. Tesla Shanghai is the start of a massive hub of Tesla in China. They have an R&D facility. They're doing vehicle design, engineering. They're going to come up with a new vehicle, the Model 2, cheaper compact car, going to launch in China first. I bet they're going to start building the Tesla Semi. They're like, damn, we can't get the batteries in the US, taking way too long. Wouldn't even surprise me if we get news that they're going to build the Tesla Semi at Giga Shanghai starting in 2021 or 2022. Like, I think this is truly a hub of Tesla expanding, like this is the first wholly owned factory by a foreign automotive company that has built a factory in China in history. Like, this is a moment in economics that Tesla was able to negotiate with the government, and the government chose them because they have the best technology to be let in to do this one-of-a-kind, massive symbolic of China opening their economy and infrastructure by allowing an American company to set up a factory that is wholly owned. Tesla is the first one, and China wants this to be successful. I think they want it to be a symbol of them opening up to the world, and we're going to do whatever it takes to make this work for Tesla. And that's why we've seen them roll out the red carpet. And I think, Model 3, Model Y alone could sell 500,000 units a year in China, justify billions of dollars of earnings, but I don't think it stops there. I think Tesla's well on its way to selling, potentially 1 million or more cars in China per year, especially if we include the semi-truck and the Model 2. China's just the world's largest vehicle market, an electric vehicle market. And so I think people, and I think, frankly, Wall Street is getting this. They're realizing that this China thing is not a joke. And as much as people, and, everyone loves to, like, Tesla Q, and all the haters were like, oh, Tesla's building this massive factory in China, like, that's never going to happen. It's just a pile of mud. And, like, they've just been so skeptical of it. They're like, of course it's a joke. Of course Elon says some crazy thing like they're actually going to build cars in 2020. Well, I think, we're all here in the US, everything's shut down. We're not appreciating that this has been executed. That Tesla, it went from a paper, thing to like, no, this is a fundamental change of billions of dollars of incremental cash flow is now way closer and way more likely to be realized because of what's been executed in the past 18 months. And it's going to continue. And the market is realizing that. And I'll talk about earnings. Battery module and pack facility being built as well. What battery cells are they building in China? They already have a battery and module production line. Oh my God, there's some pictures here. They're using modules, so it's not cell-to-pack technology. I'm looking at the picture of the page here on 14 of Tesla's shareholder letter. So they definitely still have modules. Interesting. Yeah, so Tesla is building battery production as well. So the Shanghai factory is basically combining the Gigafactory in Nevada and the Fremont factory as well. I think in the long term, I'm seeing some comments about XPeng. I think there are a lot of people who wonder about the IP situation in China. I think Elon wants to spread the technology of really good batteries as fast as possible to anyone, and so he doesn't really care. That's part of it. The second thing is China's a massive importer of oil from a strategic geopolitical perspective. I don't think they like that. I think they want expertise on the next transportation technology of the 21st century, and that's the electric drivetrain and battery, and that's why they're investing in doing that, not beating Germany at ICE cars. They're going to just build from the ground up with EVs and be an exporter maybe in the long run, or at least build their own EVs. They're going to let China in, or they're going to let Tesla in, get some expertise, and I think eventually that will help XPeng and NIO. But I personally don't. So I think there's a real threat of IP in China, but that is what it is. I think my personal opinion is that Tesla will become, Apple's figured out in China. I think a lot of US and Western brands can do really well in China, and actually Chinese consumers love them. And I went to China, I was on the ground. I think people love Tesla. And I think it will, it's not going to sell every electric car in China ever, but it will be able to have a 5 to 10% market share and be an amazing profitable business for Tesla. So I think their partnership can work is what I'm saying. Oh man, so Sandy's going to be pumped. Simplification of vehicle structure manufacturing. Shout out to Martin if he's putting in work on these investor decks, the investor relations officer of Tesla. He's awesome. And I know he's putting in a ton of work to make us these amazing charts. And why is Tesla getting better? What other car company is showing you, the 2020 Bolt, this is how we built it. Well, watch what we're going to do with the 2022 Bolt. We innovated on an entirely new production line because we're going to use more robots and it's going to be cheaper and better. They're not doing that, but Tesla is. And so they're like this 70 pieces of the Model 3 underbody that were welded. Sean Mitchell's got a great video of this on his channel. Sandy Monroe, super critical. What is Tesla doing? Rookie mistake. Model Y underbody. Those 70 pieces have been into 2 single pieces of metal, eventually at 1 single piece, much simpler in the manufacturing process. And they even have like a design piece. Interesting. Wow. They're really going in on this because they're really showing you that they have the picture of it, not just the design too, and they're showing you all the welds. And I mean, this is the pace of innovation. I love this. Tesla goes from telling us in their shareholder letter, like 50% cheaper to build out Model Y capacity to Model 3 because of improvements. Here are the improvements. Here's literally the 2 pieces we made. Here's how different they are. Like, it's really granular and you're bringing it together. Key metrics, quarterly, already went over these. They this is Tesla's 3rd quarter in a row of positive GAAP net income, which is epic. They have the trailing 12 months charts here, which I think are good. They smooth out what's going on with Tesla. I mean, Tesla's operating cash flow close to all-time highs, free cash flow close to all-time highs on a trailing 12-month basis. Net income almost positive on a trailing 12-month basis. I mean, you can really appreciate how well Tesla's doing. Almost 400,000 cars sold on a trailing 12-month basis. Lots of good stuff here. To get back to the financials a little, the energy revenue, 324 million. Energy revenue, 293 million, down from 324. So that was, worse than I was expecting. Services and other revenue, 560, up from 493. Gross profit up to 1.23 billion, up from 566 million. That's what changed everything, was the gross margin, and about 200 million of that was an increase in credits. So Tesla's gross margin still would have made a huge increase, huge improvements in profitability, even without this bump from the credits. That's really important to understand. And loss from operations. I mean, Tesla EBIT, they produced positive operating income here let's see what 283 million in the quarter. So Tesla just made 283 million versus a 522 million dollar loss last year. I mean, this is a $1 billion run rate in earnings in their seasonally weakest quarter. That is really epic. And so those are the numbers. Strong revenue growth from Tesla. The cash flow was really strong as well. Let's see what happened here. 440 million used in operating activities, 500 million in capex, about $1 billion burn, or $900 million burn. Then you have that massive raise. So that is what it is. All right, I'm going to try and summarize everything here, maybe get to some questions. Someone asked me about Cybertruck pre-orders or Cybertruck factory. Maybe we squeeze that out of Elon on the call, but they're not going to tell us much. I do think it's pretty transparent how many Cybertruck orders there are. My calculation was that there's about 650,000. I actually ordered a Cybertruck, so woo woo. How I will pay for it and how I will store it in New York City, who knows? But that's my dream Tesla, and it's fully refundable, and I wanted to lock that in. So I'm pumped about the Cybertruck. Model X will discontinue. Model X will become an earliest collector's car. Yes, I think that's a big tidbit. Anyway, high take earnings. Tesla reports them a little better than my numbers. I don't know who cares what the street thought. Really good quarter for Tesla. Fundamentally, they showed a massive improvement in profitability and cash flow from the same quarter a year ago. And then on top of this fundamental core improvement, we had a big bump up in credits because fiat kicked in and started paying those credits. So this kind of tailwinds of Tesla doing better on basically everything normally, and the tailwinds have resulted in kind of like a blowout quarter for the moment. And it'll be very interesting to say, like, okay, this $150 million bump in credits, is that gonna last every single quarter? The fiat deal is supposed to be $2 billion. I mean, this might not be a one-time thing. This might be a permanent elevation in Tesla's credit revenue, and they get credits for every vehicle produced, and depending on legislation for how many these other car companies need to buy these credits. But if Tesla keeps producing more vehicles, and these other car companies keep needing the credits, I don't see why this revenue line item couldn't grow or at least stay around 350 million per quarter. But it is important to remember that, like, I want Tesla to be able to build cars, succeed, sell them profitably, be able to justify a $1 trillion valuation without a tax credit revenue line. So important to keep that in balance. It looks like Model Y is already much more profitable than Model 3 had been. They're going to be able to ramp that really quickly. Gigafactory Shanghai, basically continuing to be like, if you could paint out the most bullishly optimistic, even better than what Tesla's planning scenario in your head, they continue to hit that. Like, 150,000 by end of year one? Nah, we're going to hit it halfway through year one in 2020, 200,000 cars a year and keep expanding. Like, it's crazy. So I think Giga Shanghai is going to be a real bright spot. I personally am nailing it down to like May 20th, May 25th. Fremont needs to be up and running near full capacity around June 1st, right around there, or we don't have a chance at hitting the 500,000 deliveries, but does that really matter at the end of the day? No. The other good thing here is no big surprises. Sometimes when you have the economy shutting down like this and just quirky, weird quarters, you can have like, oh, we had to spend 400 million because we had to pay for some contract that we couldn't cancel, and that's, cash that got, that can happen. And nothing like that happened, and Tesla kind of guided that, like, we still have 8 billion in the bank, like, we're in a pretty good position, like, we don't, no ugly surprises about how this economic shutdown is affecting Tesla. Another really good silver lining, because I was kind of worried about that. Let's see what the stock's doing. Wow, Tesla stock almost to 900 after hours, up about 9% to 870. That is awesome news. Ross Gerber, what up? Okay, any more questions? Been streaming for a while. Epic quarter. I think energy, that's one of my big questions on the call. Why is Tesla's energy business seen as non-essential? Not sure. I'm very interested to hear about that. Any questions? Cybertruck. We did it, boys. So get ready for the conference call. It's going to start at 6:30. I mean, this is going to be a fun one. I think Elon's going to be pumped, but I hope they take a Netflix tone of like, we're very worried and very cautious, and sort of, temper the market's optimism, and sort of manage expectations for what I think is going to be a very ugly Q2. So I'm really hoping that, they kind of take a good tone, and Elon doesn't get on the call and start talking about how they should reopen the economy and making all these political statements that everyone's going to write articles about. Like, I hope that doesn't happen. Yeah, so I'm pumped. My expectation for Q2 is it just I think it's so up in the air depending on when they can open the factory. Like, it just everything depends on that. You know what I mean? And we just don't know. And so until we get more clarity on that and know, it's going to be really hard to figure out what's happening in Q2. But we're already a third through Q2 and Fremont's been closed. How many cars is Giga Shanghai delivering? They didn't really tell us. So, yep. Anyway, thank you so much for tuning in. This was so fun. Over 7,000 people hit, still almost 7,000. Like, that's unbelievable. Batteries. Tell me more. Okay, what do you want to know about batteries? You got me. Super chat. I think there's a good chance Tesla might be transitioning some of its products to a new battery pack before they launch Battery Day. That could be happening. I still think Battery Day, Elon wants to have it, but he wants to have it in person because there'll be some sort of demo. So I think they're going to wait for that until things reopen. And they're going to announce a 1,000,000-mile battery. They're going to announce that they're bringing battery production in-house. The whole world is going to freak out and say it's too good to be true. And then Tesla's going to start executing on it. And yeah. Oh, actually, I also have another crazy whatever. I'm live, so I might as well talk. I think Rivian or Amazon should buy Rivian. I was tweeting about this, but I'm like, man, now I know Bezos wants to compete with Amazon or with Tesla so badly, and I know that like this is the time to buy Rivian. Rivian is raising money right now. They're desperate for cash. Amazon wants to vertically integrate. The only reason they wouldn't is if Amazon was like, this is not going to be a good business. We just want to buy 100,000 delivery vans at a 0% gross margin. Then maybe we shouldn't even buy them because we don't want to deal with building it. But if you do want to get into EVs, if you do want to get into electric, I think this is a kind of once in a multi-decade strategic moment of timing of how much work Rivian's done, how bad they need capital, how you've already been working with them. I think this is like a great moment for Bezos to go all in and actually buy Rivian, and I wouldn't be surprised to see that news drop any day now. So that's like my crazy moonshot that I'm like really hoping happens. So I can say I called it. I know Ross Gerber doesn't believe me, but oh well. Everyone thought I was crazy when I said Amazon was going to buy Whole Foods. So will Tesla produce a larger Model Y? Not sure. Thank you for the super chats. Oh, thanks for your insights. Someone asked me about the moral hazard of China in a super chat I saw. I don't know what to tell you. Yes, people have, people beef with the way China runs their country, but would it help to get them electric as fast as possible and mitigate their pollution? Yes. No matter how you slice it, we're on this planet with, billions of other people, and them reducing their emissions as fast as possible is in all of our best interest. And so that's the way I look at it. Love your enthusiasm. Oh, thank you for the super chat. Getting a bunch of texts right now. Anyway, you are all awesome. I'm going to chill for a little bit, and then I'm going to get on the conference call, and then I'm going to make my super edited, in-depth video with all the charts. Clean Technica has a live stream of the call if you don't want to do Tesla's site. I linked that below. I'm sure Hypercharts has updated all of the numbers. Jeremy, bro, you're ridiculous, dude. Stop super chatting me. You're too nice. Thank you, though. He must have had a lot of Tesla stock, so. Anyway, yeah, I'll see y'all next time. But I'm gonna put out my big edited video is coming out tonight. I don't go to bed till I put it out, so that's gonna be an epic one after the conference call, which is gonna be so fun. So make sure to tune in that. Anyway, thank you so much for tuning in. Really appreciate the time, the questions, the comments, the super chats. Y'all are awesome. Stay safe.